Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading day and trading hours, of course. I'll be introducing Mr. Rob Roy here in just a few moments, but as always, we do have to cover our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's the main point to take away. Other than that, the market continues to consolidate. It's looking towards the CPI and PPI report that comes in later this week. So interested to hear Rob's thoughts on that, and of course the overall market impact that this hurricane may have on it, and just the market in general. So very excited to interact with you all as well at this moment in time. I'll introduce the man of the hour, who we're all here for, Mr. Rob Roy.
Hey everyone. Hey Zach. Welcome to this week's TradeFinder Live. We will talk about the markets and how the hurricane may affect things. We're going to look at natural gas, oil, probably going to be our case study consideration for the day. There isn't anything in the AI atmosphere, so we'll focus on energy with where we could go. But taking a look at the chart, as you mentioned, we're still consolidating, Zach, and have been for we're going on a month now where we haven't gone anywhere. In the U.S. market update, if you haven't looked at the U.S. market update, you can see that I talked about this potential of an ending diagonal pattern here. It's not perfect, but it's pretty well formed. And one last little move higher would actually pretty much complete an ending diagonal pattern. Pardon me.
Bless you.
Woo.
Third time's the charm.
Yeah, hopefully. Well, that came out of nowhere. They're going to be heading back down to Hurricane Alley in Florida here soon. So, goodness, going to try to sneak in right behind the storm. And I know that you got it coming your way. And I have a lot of friends on the west coast of Florida back in my Golf Pros days. That's where I was. So a lot of thoughts and prayers out to people on the west coast of Florida. Let's hope the wind shear does come in and make it not as bad as expected. But as far as the pattern here, it's something that we have to pay attention to. It seems like with the Fed moving into a bit of a rate easing cycle, if they indeed are, that we would be okay and not have a significant move lower. But if this is indeed an ending diagonal, meaning that wave 5 is complete, then you would look for a move back down to the previous 4 because this wave 5 did not go past 100%. So that's a pretty significant move lower from here. So what could cause that? Well, the thing that's still concerning me, we talked to this about this yesterday during Ewo Trader Live for our alert subscribers at Ewo Trader. The bond market is quite confusing at the moment. If we look at the TNX, this is rates on the 10-year. You can see rates are moving higher and significantly so. I mean, rates are just shooting to the upside. Why? No idea. If the Fed was truly moving into an easing cycle, then we shouldn't be seeing rates move up like that. Chairman Powell did say when they cut 50 basis points that the Federal Reserve was going to continue to reduce their balance sheet. Perhaps they're reducing their balance sheet at a faster rate than the rate cuts. But you should not be seeing rates move up like this if the Fed is moving into an easing cycle. That doesn't make sense. And if we go out on the longer end of the curve on TLT, so this is the 20-year, you can see prices are going down. A quick reminder, TNX is yields or rates. TLT is prices and yields move in inverse proportion. So at TNX, you're seeing that rates are moving up. TLT, you're seeing prices are moving down, which means rates are moving up. So awful lot of movement going on with interest rates. Why? If the Fed is moving into an easing cycle, it means to me that either the market thinks the Federal Reserve is late and just way behind the curve, and we're going to move into some sort of a significant recession, and the Fed has some serious catching up to do on cutting rates. Or it could mean that the Fed is really concerned about inflation coming back, and they're tightening in the background. This is just jawboning, talking about a 50 basis point rate cut, and they're actually going through a further tightening, which could be causing rates to move up to the upside. We do have the dollar that is moving higher, so at least that's a good thing, where it hung around this 161.8% level for quite some time. We finally got a little bit of a bid back. Now, the interesting thing here is we are in a qualified 5-wave to the downside pattern, but that's because we've moved up to a 43% wave 4 correction. If we continue higher, this pattern could become disqualified. If we roll over, that would concern me. We don't want to lose the dollar. So the fact that the dollar hung in around this level, that it was concerning to me. The 99 level was the next level of support. We didn't quite make it down there. We don't want to give that up and have a big move to the downside. We need a dollar to stay in there as far as the currency of last resort if we do move into a more global type recession. So is this an indication of stagflation? That could be a concern with the fact that inflation starts to come back a bit and the economy slows. The economy is slowing some, it's not slowing significantly. So there's just anything could happen yet. Any scenario is still in play. We're in a bit of a flux right now in the markets. And when you're in a flux like this, sometimes the best thing to do is be a little patient and let's see how things play out. So we move into taking a look at the Dow. The Dow has been performing pretty well, but it's also consolidating here right around 420. As long as it stays in this 420 area, it's okay. Even if it were to break that, we have some support down here in the area around the wave 3 high, which is 415. So if it breaks 420, there's still some support at 415, so we could be okay there. Not too much to worry about here, even if we give up this 10-day moving average. You can see we closed below it yesterday. We're trading below it today. So potentially a follow-through day below the 10-day moving average, which would lead us to believe that, 415 is what's coming. And then we take a look at the Qs, and we have this triangle forming here right at the A-wave impulse extension. The fact that this zigzag pattern is still qualified, we have the potential to move up to this 100% extension, the B wave correction, right around that 61.8% level. So the first part of this zigzag, it was very well formed. So we had a monowave A impulse, we had a monowave B correction. Now we're in a complex C wave with this triangle forming here. So complex means pattern within a pattern. So we have a triangle here within the C wave, and that makes sense, especially after a monowave A and B. So that means that there was no other pattern within the A or B, more 45-degree angle moves. But a complex wave is a pattern within a pattern. So we have this triangle here. If we break to the upside, then we probably go finish that wave C extension right at the 100% level, which would make a whole lot of sense. But if we don't, if we break to the downside and this zigzag goes away, then we could see a move back down to the 450 level, because what would happen, at least what happens most often if you have a failed zigzag pattern, is you retrace the entire C wave impulse. So we would be looking for a move back to 450, but we're not there yet. We have to see which way we break out of this triangle here in the C wave extension. Looking at the IWM, also a triangle here. So indecision, if you're one of those like myself that have used the IWM as a proxy for risk on, risk off, you can see that we're right in between this 205 to 225 area, which is kind of the trading range that the IWM has moved in since mid-July. And if we break to the upside, we'll run into resistance at 225. If we break to the downside, we'll hit support at 205. So right in the middle with the triangle, and we're in the middle. If we were to close where we are now, we have a doji on the day, but we still have time between now and when the market closes. So who knows if that doji holds, but if it does, then perhaps it's telling us that this breakout is sooner rather than later. We take a look at the VIX. We're back above 20. You can see that we've broken above that level. We talked about this yesterday in the Evo Trader Live as well, and talked about it last week during our insiders meeting, that with this range that we have had between 12.5 and 17.5 on the VIX, now seems like from mid-July, 15 has been the low. We haven't broken below 15 really since mid-July. So even though we're saying, okay, well, 12.5 to 17.5, well, maybe we're more into the 15 to 20 range now rather than 12.5 to 17.5. So the range has moved up just a little bit more volatility being priced in. That makes sense with the election coming. Who knows what's going to happen out of the election? Perhaps that's what's going on in the bond market, but I don't think so. It would tend to make more sense that we would have prices going up and rates going down if money was moving into the bond market as a flight to safety moving into the election. That's not what's happening. The exact opposite is happening. So what's the bond market telling us? I don't have the answer for that yet, but it's telling us something. The bond market is trying to flash almost a black swan type event at this point in time, just basically meaning I'm not trying to be any sort of a sayer of doom, just perhaps something that we're not thinking about that could be about to occur in the bond market. But while we are above 20 on the VIX, we can expect more intraday volatility. So that covers the general markets. Let's go ahead and take a look at what's going on with the crypto world. Had a nice little bounce yesterday, giving some of that back now, hanging around 62,000. But the key is we held 60,000. We went up to 65. And if we could have broken above 65, then we had a chance to go to 70. But we just consolidated there down to 60,000. But we're holding that and somewhere between 60 and 65. So we're in no man's land with Bitcoin. I think you just watch this. If you're looking for an entry in Bitcoin, I think you want to wait till we break above 65,000. There is a possibility if we break below 60 that we go back down to 55. So it's not that much. So if you're in Bitcoin, obviously you stay long. If you're in Bitcoin, you're probably in for the long term anyway. But if you're looking for an entry from a trading standpoint, let it get above 65,000, then we should have a pretty good run up to 70. But it's got to do it first. And at this point, it hasn't. Ethereum hanging right around that 2,500 level, right at the point of this breakout. It's not a great symmetrical triangle, but it is one nonetheless. We do have some higher lows and lower highs. As I said, not the most well-formed symmetrical triangle, but nonetheless, it is a triangle consolidation type format right here at 2,500. If we break below that, then we need to try to hold 2,250. Same story we've been talking about. We break above 2,500, then we have to look and see if we can get up towards 3,000, and then maybe even a little bit higher than that. But 3,000 has to come first before we can talk about anything else. So we'll wait and see how the breakout occurs from Ethereum. So kind of in wait and see mode in crypto land. Not sure you want to take too many bets there in crypto. Just give it a little time here and let it break out and give us an idea from one of these patterns. Let's take a look at the metals. And we'll start with silver because we had that one that had a target of 30. We hit that, so we're going to cross that off. So silver hit its target at 30. That was our 9/24, September 24th case study consideration. If you remember last week, I put it to you guys, and we did a vote for the community in TradeFinder to pick what they wanted the case study consideration to be. Gave a couple choices, and GLD was the pick. So we'll look at that in a moment. But notice that once we hit that 30 level, we have backed off on SLV, and we're hitting the 50-day moving average. And we want to keep an eye on that. I think that the problem that the metals are having right now is interest rates going up. If that calms down and we do start to see rates start to come back down again, then you would think there would be a renewed move higher in the metals. But maybe not. Let's wait and see what happens in the bond market and then give us an idea of what could go on here in the metals. So if we look at GLD, we had a target price. We were looking for a break to the upside there around 255, but notice we've broken to the downside out of that little triangle. Now, it's a small triangle, so it's not a huge move, and we've pretty much made that move already. Maybe we come down here to this next level of support, but there's a little bit right here at 240. If we break that, then maybe we come down here to this next area at 235. But for now, we'll see if we can hold 240. Breaking below the 10-day moving average today, though, we'll have to decide if we break 240, would we want to hang in there till 235? I think we would, because that's a stronger area of support than 240 is. Now we'll need to see if we get follow through tomorrow to the downside on GLD. But for now, hanging in there so far at 240, but that could change. So we're going to watch this one pretty closely as far as what we want to do. Now, something that I think is quite interesting, this is on a speculative standpoint, but I think it's worth looking at, is natural gas, especially with this storm in the Gulf. I'm a little surprised that we're not getting a bigger move today. You can see that we're forming a little bit of a doji there today, right on this level of 15. This is highly speculative. We're still in a qualified five-wave pattern to the downside, and we could easily break below 15 and start to head back down to this wave 5 low. That could very well play out, and maybe that's what happens. So maybe this was nothing more than the wave 5 forming. We went up to about a 50% correction. We're not going to come up here to 20 and roll over. That would really play into Elliott wave rules. But we have to break 15 first. So for now, we are holding this 15 level, and I'm going to go ahead and take this line off. We did have a little bit of a ascending triangle that broke out, all of that, so we can take that line off. Now we need to focus on 15. Also happens to coincide with the 50-day moving average. So that's why I'm saying from a speculative standpoint, you could take a shot at this right now, holding 15 to see if 15 becomes support. It was resistance for quite a while. Let's see if it can become support and we bounce higher. If we break below it, then you've got an easy trade to the downside. So your stop is right here at 15. So I like this from a risk to reward standpoint. A speculative move to the upside on UNG. It breaks 15, you get out. So you don't have to worry about too much of a drawdown if it goes the other way. If it bounces, then perhaps we bounce higher and negate this pattern. But we do have to keep in mind that that's a pretty well-formed five-wave pattern. And then oil is also something really interesting with what's going on in the Middle East and then also in the Gulf. But we're getting a little bit of a break today. Talked about this yesterday as well in a couple webinars that we've gotten a little too overbought. Didn't want to chase that move in oil, even with the storm in the Gulf and likely some of the rigs shutting down. But it's a little south, so it's not quite as many maybe closing based on where the storm is. But who knows? Haven't seen the data on how many of the oil rigs they're closing in the Gulf, but it seems like they're pretty clear on where the track is, and perhaps they're keeping those more northern Gulf rigs open. But we did get a move back down to vertical. You've heard me say these all the time. Nothing goes vertically for very long. Nothing gets too far away from the 10-day moving average. My expression is no security in any time frame gets too far from the 10-day moving average. Oil bounced up back to the point of the triangle, so it's fulfilled the Elliott wave corrective triangle rule. And now we're coming back down, and you can see the low of the day got near the 10-day moving average, and we're off the low. I think USO is something that could be quite interesting as well. Just didn't want to chase it yesterday with that vertical move, but coming back down, I think that's pretty good, and maybe we get a little more out of USO to the upside. So I think UNG and USO are both areas that we could look at for case study considerations for this week. If we go and take a look at our previous case study considerations, we can see that, first of all, I did want to show you NVIDIA breaking out nicely out of its symmetrical triangle. You can see making that nice move to the upside. And then how is that continuing? This one's confounding a little bit as well. If we go back to the Qs, you can see that just a little bit of an update, but not a whole lot going on. but there is something going on in NVIDIA. We also talked yesterday about MSTR, MicroStrategy. Could be quite interesting right now with the opportunity to break higher with Bitcoin. And we got a little bit above the 10-day moving average yesterday, and we're following through with that today, which is a little surprising. I feel like that needs to come back down, so I wouldn't want to chase that right now either. But let's see if it does come back down a little bit and give us an opportunity. But that might be it. The low of the day might be it today, but I would have loved to have seen it come back down to test this 175 area, since that was resistance. Come back down, test, and see if that's support. It may not do that. It may have given us the only pullback that it's going to if we do get Bitcoin to continue and move higher. As I'm sure you're aware, MicroStrategy is basically bet the farm on Bitcoin with the amount of debt issues that they've had in order to acquire more Bitcoin. But if we look at the SPY again, we've kept that as a hedge against long options. We looked at that one on the 10th of September, and I think we want to stay here and keep this as well, especially with this formation of a potential ending zigzag. We could have a move back down that could happen rather rapidly. It's just prudent to keep that SPY downward position, so that's puts not to the long side. So we're bearish on the SPY as a hedge. And then let's take a look and see what's going on with the XLF. The whole area in the financial world is not acting as you would expect with the fact that the Fed is moving into an easing cycle, but that plays into what's going on in the bond market. Why are rates moving up? Why are rates moving up so significantly? And if rates are moving up that significantly, obviously, that's going to be a problem for the financial sector. So the XLF is not moving. However, we did break out to the upside of this triangle. We could be testing the breakout. Remember, there's three primary ways that we break out of triangles. One is we break out, test the breakout, and take off. Another one is that we break out and just run. The other one is a false breakout, where it looks like you're breaking in one direction, but the big move is the other way. That could still be in play as well, especially if rates continue to move to the upside. So we need to keep an eye on it. But for now, we are above the point of the breakout, and we're above the 10-day moving average. So you wouldn't want to take that off yet. Perhaps we get some calming in the bond market. We get rates to come back down, and the financials resume with a bid and move higher. And then also we have Key, which is in the financial sector as well. And just hanging in there okay. Also, we have our target price up around 18, and we're holding in just under 17, but we are above the 10-day moving average. You can see another doji here. So there's some indecision at this point in time in the trading day, but there's still time before the market closes. So who knows what happens between the time now and where we close. But I'm going to end the market rundown as the storm is coming in. I'm going to be heading to Florida. We're not going to be able to chat with you again for a few days. And for those of you that are subscribers at evotrader.com, hopefully you are viewing this TradeFinder as well. So I'm going to do a little bit of an extended Q&A today. So we'll spend some extra time answering questions. And then Zach will be back at the end. I think we're going to try UNG as our case study consideration for this week, with a little bit of a nod possibly to USO, but we'll make USO the official one, and that's going to be real tight on the stop. Again, it breaks below 15, your stop, you get out, but we're going to see if it tests it. So kind of a little speculative on what's going on, and that's kind of what's happening in the world of the AI within the impulse strategy at Evo Trader is not a whole lot going on. And when we see that, it tells you the market's in a state of flux. And if you're not getting high value signals, which is what we look at for sending out alerts, that's when you just say that, hey, sometimes the best trade is no trade. That's an expression that I heard way back in my early days of trading, and it served very well throughout my trading career. You don't want to force things. You don't want to be putting on trades just for the sake of putting on trades. That's a loser's game. You want to put on alerts that have the greatest percentages in your favor, knowing that there is nothing that's 100%. There's no guarantees. You do your best, and you work to be right more than you're wrong, and be prudent in your trading. That's how you become successful. There's nothing that's 100% or works all the time. All right, so with that, Zach, let's go ahead and take some questions if there are any, and we'll give a few extra minutes just in case there's people, since likely going to have some power issues and things to deal with this storm heading towards Florida.
Yeah, no doubt about that. And to echo those sentiments, our thoughts definitely go out to those on the West Coast. And we'll get to the first question here. And again, with the extended Q&A, we'll look forward to seeing everyone back on Tuesday next week and having this all behind us. But today we'll do the extended Q&A, as Rob said. Question from Dean. Thanks for the valuable updates. Could you please check MELI? Looks to be in a wave 3.
Haven't looked at that one in a while. This was we talked about this one a while back. Mercado Libre was something that I used to trade years ago because it was so volatile and it would move so much. It wasn't a wave 3 according to the algorithm. It is now labeled a wave 4. It's green, so it's still in a wave 4, which means that may not be the end of it, or it may be. But for now, the algorithm is not sure the wave 4 is over. We came down here, we tested the 50-day moving average, we're moving back. If you're long this, I don't see any reason to get out. But if you're looking to enter, then you want to wait and get back above that 10-day moving average. So we're right here around the $2,000 level. Let's get back above 2,000. Let's get back above the 10-day moving average. And then if that occurs, then I think that's a pretty good entry on the long side. The DMI is not too positive at this point in time. So I think I would wait for sure to get above that 2,000 level. If you wanted to be really conservative, everybody has their own risk tolerances. I talk about this all the time. Try to give more aggressive entries and exits and more conservative. If you were more conservative, you would want to see a break above 2,100. But if you have some risk tolerance, break above 2,000, I think you take a shot. But if you're more conservative and say, I kind of want to wait a little bit longer, let it break above 2,100. If it can do that, then I think you might be off to the races here on MELI. That could be a quite interesting move, breaking above 2,100. If we don't hold this 2,000 level, if we just test the 10-day moving average, come back, test 50 again, and then break below it, well, then you're coming all the way back down to 1,800. So perhaps you wouldn't want to wait for that move to play out. So a break below this 50-day moving average with some follow through, you'd want to just get out and see what happens when it hits 1,800. But your long entry, aggressive above 2,000, more conservative above 2,100. So yeah, haven't looked at that one in a while. Happy to take a look at there. It brings back old memories.
Absolutely. Always good to dive into some nostalgia there. Question from Lori. AMD broke out from a triangle last week and NVIDIA just broke out as well. Any comments?
Yeah, talked about NVIDIA, certainly breaking to the upside, and then AMD as well. Makes no sense what's going on right now with what's happening in the bond market. So no idea why we're getting these moves here. This is one of those dichotomies that I call it, that when this occurs, you just kind of have to wait for things to come back into concert together. These consolidation collaborations, if you will, normally work out. And so when they're out of whack like this, the best thing to do is pay attention and just watch and then wait and enter when things make a little bit more sense. We are in this C wave to the upside. It does look like that's a zigzag. Let's see here. on AMD. We did look at the chart of NVIDIA earlier, which is broken out. We're right at 30%. Would have liked to have seen a little more of a movement there. So with a 30% B wave, you're only looking for a move up to 61.8, which is right around 180. So a little bit more to the upside here, perhaps on AMD, tiny bit overbought, but it's a nicely formed zigzag. Just wish the B wave correction would have been a little bit further. Would have felt better about it, and perhaps we would have gone up to this extension back in the 185 area from back in early July. For now, we're just looking more in the 180 level as the potential move. And then just going back to NVIDIA, yes, breaking out of that symmetrical triangle there. So I like the zigzag on AMD. Little bit better looking triangle pattern breakout on NVIDIA. And as I said, why that's occurring with what's going on in rates, I have no idea. No idea whatsoever. But you trade what the market's telling you, even when things don't make sense. The market does this from time to time. It does things that don't make common sense, but you have to take what you think should happen, what normally happens, all that stuff out of play, and trade what the market's giving you. And that's a definite breakout on NVIDIA. It looks like it's trying to give us a follow-through day. We'll see if it can hold that into the close. If so, then yeah, AMD, NVIDIA, maybe rotations going back towards the AI stuff, the AI chips, and forget the rest of the market for now. But still don't like what's going on in the bond market. Something odd right there.
Something odd indeed. Next up, a couple of symbols from Mikael. First one is EC.
EC.
That's correct.
So breaking below 9, not quite sure what's going on there. Not familiar with this stock, but significant downward move today. It was trying hard to hold 9, and I don't know about the institutional ownership here. If there's institutional ownership, this is a real problem and could yield to more selling as institutions look to exit and get out. That's a distinct possibility. But for now, we'll look and see if we can get back above 9. I'll have to do a little bit of research. Maybe we can revisit this one next week to see what the institutional ownership looks like, etc. If there isn't a lot of institutional ownership, then this level isn't really that significant. If there is, then you would need to have the institutions come in and try to buy it and get it back above 10, because that's the key. 9 is bad enough, but breaking below 9 is even more of a concern. And that could force institutions that have just growth or growth in income as their investment objective forced to sell. They have to sell to get out. That's how the securities regulations work. If you're registered as aggressive growth, you can hold stocks above 5. So again, that's why I don't know if there's much institutional ownership here. If there is, where is it located? But the break below 9 could be a problem. So for today, you're getting decent volume on a break below 9. You would want to look to see if there's a follow-through day tomorrow. If there's a follow-through day tomorrow, then yeah, then we have a probably move down to 5 in this if we don't get the institutions to come in to support. So if you're looking for something bearish, this could be a good one right here. If you're looking for something bullish, then you got to wait. Let it get back above 9 and more ideally above 10. I don't think I'd want to go long this stock unless it got above 10. But if you're looking for something in the short, you get a little follow through below this 9 level, you could have a pretty fast move down to 5. So that could be a pretty decent short there. So I'm not sure in the question that was asked whether they're looking long or short, but that's how I view it at this point.
Thanks for that insight there, Rob. Second symbol is going to be PBR.
Yeah, Petroleo Brazil. And yeah, we did get a little bit of a pullback in USO. And I think we could get we've had a pretty nice consolidation here. Again, not the greatest triangle, but still consolidation nonetheless. There's a decent set of higher lows there, kind of a gap there on the lower highs. I like when the triangles are more well formed, more touches of the lines. It is consolidation though, and it's a bit of a triangle right there at 15. It's in a wave 5 to the downside with a wave 4 at the 61.8% level. Can't ignore that. But if Elliott was here, he'd say, yep, that's a great wave 5 to the downside pattern setup. But with the triangle, you look to the triangle first and expect a breakout move, and that carries more weight than the potential 5 wave to the downside pattern. So for now, let's see if we break above this wave 4 and disqualify the pattern from the triangle, or if we break to the downside, then we know where we're going. We're probably going down to 12. So this to me looks like a pretty decent. Let's see where the ADX is. Yeah, the ADX is very low. That's actually a really good strangle at this point in time. It's been consolidating for quite some time and probably pretty inexpensive as far as a strangle. I think that is pretty interesting there. We have to take a look at the liquidity in the options, see what that looks like. Let's see. Move on. Try December. And yeah, plenty of open interest. Yeah, no issues at all with options. That looks like a pretty good strangle to me on PBR. I think that is a place that you would want to look for a potential move. Now, it's not going to be a big winner. Just so you're clear on that, it would be a small percentage gain in the 25 to 30% range. Probably about what you get because it's just under a 3-point breakout move. So it isn't going to be a home run, but it could be a good solid winner without having to pick direction, especially with that ADX being so low. It seems like that's getting ready to move.
Very well. Thanks, Rob. Another blast from the past for you. This one's from Will, PANW.
Yeah, we're seeing some older ones here, Palo Alto, and see what's going on here with security, with the big move to the upside today. Wave 4 right at 38.2%. So that wave 5 extension should go up to 61.8. I think with everything that's going on globally, let's see what the DMI looks like. We need to get that ADX a bit higher. It's awfully low. That concerns me. It looks like we're breaking nicely to the upside, and we're breaking above 350, which is key. The ADX is just really low. See what the CCI. The CCI is giving us a little bit more of an upward signal there. I think you have to be cautious on this, but you could be cautious and go long. And I would be concerned about this break above 350 to see if we get follow through tomorrow. But a pretty good move there. Let's see if we get more volume into the close. We'd like to see a little bit more volume to hold that move. But if it can hold that 350 into the close, maybe right before the close, you could try to go long there and see if you get follow through tomorrow. But your stop would be 350. We break back below 350, you get out. So once again, you could take a speculative long here, but only as long as it stays above 350 at this point in time.
Thanks, Rob. We're going to follow it up with MU from Martin.
Good old Micron had a big move. You can see why I talked about this before. I like to chase that stuff. Big gaps up, vertical moves. It just doesn't work. So we are coming back down, consolidating here, trying to hold 100. And once again, I mean, we've got a lot of these today with the Q&A with aggressive type scenarios. So if you wanted to put something aggressive on at 100, you could try that and see if we hold here. and can turn around and bounce higher. The problem is that wave 4 is at a strong level at the 61.8% fib level. We've come back down, but your risk management here is pretty clean with a tight stop. So 100 is it. If you wanted to go long here, you go long, you break below 100, you get out, and then regroup and see what happens. This could just be filling this gap. They had really solid news with what's going on with NVIDIA and AMD. You would think Micron would continue to go back to the upside. So again, all this could be is a little backing and filling from this big gap up, getting too far from the 10-day moving average. So I think you could be constructively long Micron as long as it stays above 100. Breaks below that, I think you exit and watch to see if that wave 5 pattern plays out, which that again would be something pretty negative occurring.
Next up, we have Dr. B. What do you think about PayPal while it's at a 52-week high? Thank you.
Let's see about PayPal. Heck of a run. It's got a zigzag there, so I'm not sure that's the end of it. But the wave 5 is at 127%. We're at the top of the wave 5 tap box. Really good wave 4 correction there at the 61.8% level. Let's see. Oh, no. So 38 point. We're going to go up here to, it looks like just under 85 would be where you'd look for the target price there. So I would say 84 half maybe. We're a tiny bit above the 10-day moving average. So PayPal looks really good. I think it has a little bit more to go, but then I would be pretty cautious after that. Complete this zigzag pattern and see from there. Yeah, the DMI looks pretty good. So yeah, I think you've got a little bit more to the upside there on PayPal. That's what it looks like for now. Breaking above that A wave impulse is key too.
Very well. Next up, we have Clive for UPST.
UPST. Upstart. See what that looks like. Not on a 5-wave pattern, but what a nice looking zigzag pattern. That looks pretty good. So we're in corrective mode here. Right at a 50% correction. That would send us all the way up there towards the 100% extension up in here. Let's see what the DMI. And we need to get that ADX to, it's so low at 10. That's a little concerning. The zigzag pattern looks great, but gosh, that ADX needs to be higher to break that A wave impulse. We need to break that A wave impulse to head up there to the C wave. CCI looks pretty good. Money flow looks pretty good. But I would want to see that ADX. It is trying to turn up, but I think I would want to be a little patient on this one. I think you have a good potential move to the upside here, but there's plenty of room after it takes out this A wave high. So I think I would put this on my watch list. I don't think I would jump in now. I would wait, let it get above 45, break that A wave impulse. Let's see if we can get that ADX to turn up a little bit. And then I think you have a run up towards 55. So I would keep that on a watch list and watch it, but I would want it above 45 first before I got in. The ADX is just too low so far. It's had time to move higher from those lows in September, and would like to see it just a little more upside on that ADX.
A little bit more upside on Upstart. We'll go over to a couple symbols from Alexandru. There's too many easy puns there. I had to get one in. First one is going to be Siri, SIRI.
Let's see how Sirius XM is doing here. Not well. Joe Rogan, I guess, needs to step things up. But we're down here. No, I guess he's on Spotify, isn't he? So he's not Sirius. He's Spotify. Never mind. This is
Howard
more
Stern.
Howard Stern. Yeah. maybe it's Joe Rogan's taking some of his audience away. Maybe that's what's going on. Yeah, this one I would stay away from. We're just drifting down in this wave three. Perhaps we can hold right here around this level, just above the 22 level, and try to get back above. But I wouldn't want to go long this until we got back above 25. I would want to see that break above 25. I don't think I'd right now either because it's trying to hold this 22 and a half level. If it can hold it, we got a little bit of a descending triangle right there. And if it breaks below 22 and a half, then we could have a pretty extended move to the downside, 2.5, 3 more points. So I would watch this one closely. On an upside breakout from the descending triangle, and again, any triangle can break either direction, would want to wait for it to break above 25 because even on a breakout of the triangle, it's going to have resistance at 25. Below 22 and a half, I think it's a good short. I wouldn't want to go long until it breaks above 25. Again, a watch list candidate, I would think, for this one right now.
Duly noted. Second symbol from Alexandru is going to be CLSK.
Okay. That's clean spark. And so we're in the mode of crypto with the miners and breaking below 10. That it stayed here this long. There is some institutional ownership here. So I do think this could get back above 10. It's going to need to do so pretty soon. But we're right around 9. And yeah, and this move up to 10 and then coming back down was a little surprising to me. I kind of thought once we got above 10 there towards the end of September that we'd be back above 10 and maybe we might have something going on here to the upside. But it didn't happen that way. It turned and went right back down. So I think you got to keep an eye on this. The algorithm is saying we could still be in a wave 3 to the downside. And if we are, we could be going lower. Now that would really coincide if Bitcoin breaks lower. But if Bitcoin starts to break higher, if we get Ethereum start to break higher, if the whole crypto land starts to move up, then I think you could get a heck of a run in a hurry. But let's not be impatient because there's plenty of room to the upside. So if you want to go long this, let it get above 10. I don't think I'd want to go short either because it's trying to hold in this little corridor here right around 9. So it's got this little small trading range that it's in here between 9 and 10. So let's just let it break one of the two directions and see which way it goes from there. I tend to think that higher likelihood that it breaks above 10 and goes higher, but who knows? We'll have to wait and see.
So we have this next question here from 432 Crypto Wave. Will subscribers continue to get alerts, exit in particular, this week? And so before I pass over to you, Rob, I'll say Jeff Beamer's many states away from the storm, and he's the other chief professional trader alongside Rob with Evo. So that certainly won't affect any of his trading. It all is dependent on market conditions and variable to that, of course. And then, Rob, your thoughts there?
Yeah, have actually have solar powered power if there's no power, and have Starlink internet, which can run off the solar power. So be watching the markets. There's not going to be any sort of lull in alerts coming out. Just going to not do anything as far as these live events with everything else going on for a couple days here until the storm gets through into next week. So, yeah, no concerns on the trading front. That's all covered, all set up there. No issues there, but just no more live events for the rest of the week. That's all. But yeah, be watching the market. If an alert needs to go out, they're all set up for that. No problems along those lines. Glad you asked that question. I did want to make sure that I clarified that. And if there's something that needs to be said, I'll post commentary on the website as well.
Very well. Thanks for that clarification there, Rob. Next up, we have a few requests for PLTR.
Yeah, people like that one. So we'll see what's going on with Palantir. It had made a nice move and consolidated and then moved up again. I wasn't quite sure that we were going to um, continue this upward move after the gap up and the run. Nice consolidation allowed the 10-day moving average to catch up and took off again. But issue is now we're at 100% extension. You can see we're right at the 100% extension on this zigzag pattern, and the zigzag only went a little above 30%. So you were looking for the 61.8% extension, which it did. So really classic Elliott wave zigzag stuff right here. So with that B wave correction, you're looking for a 61.8% extension. And then you're looking to see, okay, it did what it's supposed to do. Do we go to the next level? It consolidated and then went up to the next level. But now we are extended. So with that sort of a B wave correction, you've hit the extended level. I would want to be a little bit cautious on PLTR right now. The ADX is getting up towards 40. We could go higher. The separation is still good between the directional indicators and negatives going down. The DMI looks pretty good, but I would want to wait and see if we can break above this 40 level. And if we can break above it with follow through, this 100% extension that's right here at 40, and then we continue with the DMI, then perhaps we're going to 161.8, which would be up here around 47 and a half or so. But for now, I would want to actually see it break that level. So if you're long, I would tighten my stops. If you're looking for a long entry, I would say let it get above 40 with some follow through, and then you've got some room for it to run higher from there. I just don't think that you want to enter that today. If you're in it, I don't yet. So if you're in it, I would hold it. If you're looking for an entry, I would want a break above that 40, 41 level with some follow through first.
Very well. All right, moving on. We will go to this next symbol from Jadit, DKNG.
DraftKings with this time of the year, we've talked. This is the time of the year that you would think these stocks would do well, football season, as we move in towards the Super Bowl, which is the number one betting event of the year. But we're consolidating. It broke down. We got back above this level here in the 37 range, and then tried to break above 40 and couldn't hold it and came right back down. It looked like maybe we were off to the races there, but nope, didn't hold it. We had 122% wave 5 extension, so we don't need to go back to the previous 4. So this is probably done. I would imagine that is a 61.8% correction at least. Let's see. Yeah, we went more than a 61.8% correction. So we've done what we need to do from an Elliott wave standpoint. So now it's just what's the next potential pattern. And we have complex impulse right here with zigzag right there. That's already an extended move. So with a 38.2% B wave correction, you go to 61.8, consolidated there, and then went up to 100%. Very similar to what we were just looking at with PLTR. So the first level was the expectation of 61.8. It consolidated, went up to the next level. Now we're back testing the previous level, which means it's open for a potential move higher if it wanted to. But that ADX is moving down rather quickly. We need to turn soon, so we could keep an eye on this. I don't think we break below this A wave high here. I think that acted as support back in June and July and could very well act as support here. I think you need to keep an eye on this one and see what happens. I don't think I'd want to go long DraftKings unless we broke above that 100% extension. So unless we broke above, what's that, about 41 3/4 there? Unless we broke above that, I wouldn't want to go long this. 41 and a half. I want to see a break above that level to go long, but I wouldn't want to go short either because I feel like that A wave impulse is going to act as support. We're at the 50-day moving average, forming not a really good one, but a little bit of a triangle here. Once again, not the greatest formation, but a set of lower highs and higher lows nonetheless. I would watch DraftKings and see where we go. Let's do one more, Zach, and then you can show them how to do UNG.
Alrighty, that sounds like a plan. We will go with STLA from Wanro.
All right, still on us. No 5-wave pattern. Oh yeah, there is. We're in a wave 3 to the downside. Yeah, gosh. That looks pretty ugly. Breaking 15 was key. It needed to hold there. It didn't do it. Looked like it was trying to move higher, but breaking below 15. No idea where this goes at this point now. Um, it's not it's not really a clear zigzag pattern because there was so much support there at 15. Zigzags really help us get an idea of where a wave 3 is going to go. But when you have this consolidation for a number of months here at 15, it just breaking below that, you don't really look for the zigzags. This was more of a trading range. So we went into a flat. That was the corrective pattern. And we've broken to the downside. Now we may have an A wave impulse here and get a little bit of a correction and then look to go lower. But once again, with the institutional ownership is what I would want to look at here. 10 still has some room. So maybe the institutions aren't too worried about it yet. Let's see what the volume looks like. Gosh, whatever happened to cause it to break 15 was a big volume to the downside day. People gave up the ghost. Looked like we're trying to trend higher. So that trading range between 15 and 17 and a half broke to the downside, and not sure where we could go from here. So I'm sorry, don't have much of a read on this one. This is just kind of a watch and see from here on where the wave 3 could end. This is one of the ones I know we talk about having zigzags in wave 3s because the complaint about trading a wave 3 is you don't know where the wave 3 is going to end. My argument is if you have a nice formed zigzag, then you have a good indication. But when you don't have one, I agree. It's hard to know where the wave 3 is going to end. And I think that's the situation we're in here. No idea where that could end. But it could come down to 10. And then we'd find out if the institutions step in to support it. So, yeah, just have to keep an eye on that one. Not sure how to trade that one at this point.
Very well. Well, honesty is key, and I see we are at time 2 hours with the extended Q&A. So, do we want to head over to the platform and show everyone how to post the idea?
Yeah, let's post. Let's do UNG. We could have done UNO, but let's do UNG.
UNG it is. All right. So at this time, hopefully everyone can see my screen over here on the hub dashboard. As we transition over, you'll see here, this is a menu view, a jumping off point of everything that this platform has to offer. So we're going to go up to this light bulb here for the ideas. And Rob, is this going to be an official idea or is it going to be a post?
Let's just do a post on this one.
Post.
Can't really do an official idea when we're going against an LA wave pattern.
Fair enough. All right. So the difference there for anyone that might be new is that we have the official idea option, which is essentially you could equate it to paper trading. All of the data and everything is going to be real time. It's just not risking any capital or having any real risk on the line. And then a post would be having a draft idea where you're just waiting for some criteria to be fulfilled, as we are for this situation here. So this is going to be on UNG, and we will come back and make this pretty here soon. And you can comment, interact. We encourage you to interact, even if you have opposing opinions. As Rob has always said, that's what makes markets. So pretty quick one for the post today. Not as intensive as the idea. So I'll pass back over to you, Rob, and get this idea or get this post posted and let everyone get back to their trading day.
Sounds great. Yeah, once again, thoughts for everyone in the state of Florida at this point in time. I know other areas have had issues with storms kind of craziness end of the storm season is when all the activity occurred. None that happened during the summer when it normally is. But thanks again for everyone watching. Always appreciate it when you spend part of your trading day with us and our trading day. And we enjoy doing these live sessions because there's lots to talk about, and I think they're more informative and educational. So thanks again for your time. And as I mentioned, probably the last live event for this week. We'll look forward to talking to you again next week. Enjoy the rest of your week. Stay safe, everybody. Look forward to talking again soon. Take care.